The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its sponsors.
This is Denise Nostrom, CEO and founder of Diversified Financial Solutions. Now more than ever, investment advice is needed. Not just where best to invest your money, but why. Are you investing for your future retirement? Are you retired and looking to maximize your income? Are you maximizing your income and concerned with leaving money for your loved ones? Are you investing for your retirement at the same time saving for your children's education and at the same time saving to buy another home? Are the markets in line with your goals? Are your goals ever changing? Please contact me at 631-758-8691. That's 631-758-8691, or visit us at diversifiedfinancial.biz. For over 25 years, I have been helping individuals, families, and business owners navigate through all market conditions with only one goal in mind, my clients. Visit me at diversifiedfinancial.biz or call Denise Nostrom, founder of Diversified Financial Solutions, at 631-758-8691. That's 631-758-8691 for a conversation about my most important client, you. Hello, thank you for tuning in and spending some time with me today. Welcome to Friday. We made it again. You are listening to The Financial Chick Show, and I am the Financial Chick. My name is Denise Nostrom, the CEO and owner of Diversified Financial Solutions, a full-service independent financial planning firm located in Medford. I am here live every Friday from 5:30 p.m. to 6 p.m. on 103.9 LI News Radio. Your Financial Chick is here to help you make better financial decisions and choices to improve your life and reduce your anxiety and stress about money. If you have any questions on anything we discuss on the show, you can check out my website at financialchickshow.com, or you can reach us on Facebook and Instagram at Diversified Financial Solutions. So like our pages, get updates, and see what's happening. So if you tuned in last week, I was joined by my Power of Women Exchanging Resources, Inc. board member, Kim Dominici. As you know, I'm the founder and president of a nonprofit women's empowerment organization. So this week, and as like the past couple of weeks, we've been super busy trying to pull everything together for the 9th anniversary brunch. I can't believe it's been 9 years. And celebrating our 4th Women in Business Award winner, which is actually Kim. So we have so many people signed up, but we still have room for more people to attend if you so desire. The brunch is on Sunday, November 14th at Sunset Harbor, starting at 11 a.m. We're doing a Chinese auction. There's so many baskets, so many great things that have been donated by local businesses, and it's pretty cool. 50-50 raffle and a swag bag that goes to everyone that's in attendance, which is worth over $100 right now of the stuff that's in there. So it's pretty cool. The cost of the ticket is $55 per person. Please contact my office at 631-758-8691 or go to our Facebook page, Power of Women Exchanging Resources, Inc., for more information. This is going to be an amazing event, so I hope you can all be there. And again, it's not just for women, so we have a lot of men there too. So it's been quite the crazy week, and when I say that, I know you all feel the same way. I've had a lot of people come in and out of my office this week, and even here at the radio station, it is just, I don't know, there's something in the air. It's been really, really interesting. I don't know, it's just COVID hangover or just everything, the news, everything that's been going on. But boy, it was some week with the elections for sure. So if you haven't heard, which I'm sure you have, but we've talked about this red wave, and it definitely hit Long Island this week, that's for sure. We have a new district attorney, Ray Tierney. There was a re-election of our town clerk, Donna Lent. Also, I want to congratulate one of my good friends, Brendan Sweeney, who is a first time out with the elections, and he won his race. And so I congratulate him. Great guy. He's going to do great things. And there was a big upset in the Patrick Medford area with the unseating of Rob Calarco with, again, another one of my friends, Dominic Thorne. So Dominic, man, you put in a couple of good years of races, and you got it, man. This is good. So congratulations. I'm like so proud of you. One thing I really like to see is that even though there was a red wave, people do jump line when there is a person that is good and does a good job. So that person would be, in this case, Sheriff Errol Tulin Jr. The guy's done a great job, and he's liked by all sides, and he's kind of fair to all sides. So he won in spite of the fact that Democrats were not really winning their races this go around. So most people do vote the row, but now we have to make sure we talk the talk, and we have to make sure we walk the walk and get things done. There's a lot to be done, a lot to be improved. Everybody says a lot of stuff during the campaigns, but now we want to see some action. So it's pretty exciting stuff. I'm pretty pumped up, and actually, it's definitely has a lot to do, in my opinion, with Biden and all the things that are going on there. And, people are just rebelling, especially with the race in Virginia, and it goes on. It really just kind of went throughout the country. And we definitely saw it here on Long Island. So we shall see. There's hope, and maybe people won't be getting $450,000 and stuff. So we shall see. Anyway, so in other news, I went to my high school yesterday to speak with students about my journey from high school to owning my own business. And that was a really, really awesome scenario. I was there for 4 periods, and I just thought I would be seeing 4 classes, but I probably interacted with over 250 students because it was all of the business, marketing, fashion, marketing, accounting classes. So in some cases, the room was like so packed. There were 3 or 4 classes within one talk. It was just absolutely amazing. But it was a great day, and it was really interesting to kind of talk to the students, asking them about what they want to be when they grow up. Kind of kept it light and airy since, they're teenagers, and they just have masks on, so they have no expression anyway. With the mask, you see less expression. So it's kind of challenging to get them to get, intrigued or inspired. But when I asked them what they wanted to do when they grew up, a lot of them raised their hand, and it was really interesting. A lot of them did know what they wanted, and of course I went further because I'm very inquisitive. Why they picked those particular jobs. So there was one guy that wanted to be a sports broadcaster. And, he just loves sports, and, he's had a family member that was in it. And we range from RNs to tattoo artists to just a lot of different careers. And it was really interesting, but asking them why they chose, said career, they had an answer for that. So it wasn't just like they picked it out of a hat, which was really, really cool. And another question that I asked them, I asked like, who works, who in the room has a job, and they raised their hand. And I said, well, what do you do with your paycheck? As a financial advisor, there's things that you want to do. And I have to say, I was super impressed with those answers too. Again, not being provoked, but a lot of them said like, I have the direct deposit and I keep some in savings. And one kid even funneled down so much that he says, I put 70% in savings and then 30% I use. I was like, wow, he definitely had a plan. So as a financial advisor, that's what I pray and hope for my clients, to have a plan. It's great to say things in your head, but to drill it down to such specific details, that's truly having a financial plan and a plan, not just, I want to save some money. Well, how much you're saving? I don't know. I just save some money. That's not a plan. So it was a pretty cool experience, and gives me a little hope for the future. And I will tell you though, I was giving them blow pops also if they did raise their hand. So there probably was a little bit of an incentive, but I needed to do something to get some, get a rise out of these kids. So, but it did work, and it was good. And I think we had a pretty good day. And if I just made an impact on 1 or 2 kids, man, then I did my job. So it was all good. So again, and something else, a little bit late because everything's late, right? We finally got the retirement plan limits for 2022. They usually come out in the middle of October. We got them this week. So just an idea to, again, give you some planning for the coming year. 401ks for 2021 were $19,500. That's the max you could put away. That has been increased to $20,500. So we have an extra $1,000 we can put away pre-tax, or if you have the Roth contribution, Roth. The catch-up is going to remain the same at $6,500, but that gives people over the age of 50 the opportunity to put away $27,000 away in 2022. So that's pretty good. Unfortunately, the IRA/Roth IRA contributions have not changed. They are going to remain at $6,000 a year, with a catch-up for those over 50 of $1,000 a year. So if you're over 50, you can put away $7,000. If you're under the age of 50, you can put away $6,000 into an IRA or a Roth IRA. And if you're in a simple program, simple plan, the maximum contribution for this year was $13,500. That's moving up to $14,000, an increase of $500 a year. And if you're over 50, we have a catch-up that's going to remain the same at $3,000. So under age 50, $14,000. over the age of 50, you can put away $17,000 in your simple IRA plan. So this is pretty good. I mean, we had a pretty good jump in the numbers. We haven't seen that in a while, so it's good. The only thing that I'm kind of sad about is the fact that we don't have any increase in the IRA contributions to put some more money in those Roths. But don't forget that you can always do a Roth conversion, and that's something I'm highly recommending to people. If you're not sure how to do that or have any questions, always call my office at 631-758-8691 or contact me through my website, and I can help you and show you a way to do that. So we're getting close to the break, but I have a lot of information today. Actually, there was so much that I'm preparing for the show today. There was so much that I could tell you about, but I'm going to try to do my best. But stick around. This is the Financial Chick, Denise Nostrom, the company's Diversified Financial Solutions. I help you look for financial solutions when you feel like there are none. So make sure you contact me at financialchickshow.com, or you can text me at 631-758-8691. So stick around for more information after the break. Thank you. Welcome back. This is Denise Nostrom, the Financial Chick. My company is in Medford, and you can reach me at 631-758-8691 or visit my website at financialchickshow.com. I am here to help you on your financial journey. Over the years, things change, and I am here to help you navigate all of those changes. So before the break, we were talking about the changes for 2022 and how we are going to be increasing some of the numbers for 401ks, 403bs, 457s. So now is the time to start doing some planning to look at your budget and see if you can go to those maximum levels in those various plans, and possibly add to a Roth IRA. Again, I'm a big fan. The only time you can add to a Roth is if you exceed a certain income level. But again, if you call the office, we can let you know if that's something that you could do, or Roth conversions. But listen, it's you're never going to say, and I always make jokes with my clients, but you're never going to say, "Oh man, this really stinks. I totally saved way too much for retirement." You want to be able to do as much as you can and save without compromising your lifestyle now, right? So that's really the most important thing. So let's take a look at the markets. The past couple of weeks, I haven't really kind of honed in on the markets, but they have been doing amazing. Today, we were at all-time highs yet again, and people ask me all the time, how is this happening? Well, I guess one of the big reasons it's happening is because interest rates are so low. What we had was, we have something what's called the Fed funds target rate. And the Fed funds target rate really determines what rates are going to be on mortgages, on loans, on savings accounts, CDs, etc. And from like 2005 to 2015, we had historic low interest rates at a 0.25. In 2015, we started increasing those rates, or the Fed started increasing rates. We bumped it a few basis points. So that had happened from a 0.25. We got to 2.75. For some reason, it bumped down very shortly thereafter to 2.5. And we hung there until the pandemic. And when the pandemic hit, we went right back down to the historic lowest rates of a 0.25 Fed funds target rate. So we know that our savings accounts are getting at best 0.1, 0.3, nothing, zero. It's basically zero. Our money markets, even the best of the best, are paying about 0.5, maybe 0.7, while inflation is running at 4%. So, you're basically in these things. It's very important to have a cash reserve and have liquidity. But we know that if we keep a lion's share of the money there, and people have accumulated a lot of money, at least the people I'm talking to in my office. So their biggest concern is, what do I do with this money? So that's why the money's going into the market. I mean, people are just looking for return. I mean, we all need to save for different things, whether it be for retirement or whether it be for a college education. We know that runs at about a 6% inflation rate. So that's even more challenging to do. But, we need to find yield or return, and finding yield right now is not easy, except if you look in stocks, you have some dividends that are paying some good dividend yields. So if we take a look at the numbers, S&P 500, the Dow Jones and NASDAQ, three of the U.S. indexes that we compare our investments to. How are we doing? We want to compare it to something. Year to date, the S&P is up 24%. The Dow Jones, and this is through October 29th. So I always get the end, the Friday. So we always close our weeks the week prior. The Dow Jones is up 18.8 and NASDAQ's up 20.9%. If we look at the year over year, so from last October 29th to this October 29th, the numbers spike. The S&P is up 41.2%, the Dow Jones is up 36.9%, and the NASDAQ's up 39.5%. So these are insane numbers. If you look at averages of what we should get from a stock, if you're invested into the stock market, if you're getting anywhere between a 5 or 8% rate of return, you should kiss the ground and be happy about that. We're running at 4 to 5 times that. And that's wonderful. I mean, clients are coming in. It's great. We're looking at the reports and their accounts are doing well. But what we are doing is preserving some of those gains. It's going to be pretty difficult to replicate a 41, a 33, whatever the number is, to replicate that return. So it's time to look at your 401ks, your 403bs, your personal accounts. If you haven't done that yet, you really should do that and give our office a call. We can help you. We have programs where we can see if you're out of your comfort zone. Are you taking on too much risk? Are you too conservative? That I've had actually a client that came in today. We're going to be transitioning her 403b plan, and she's been sitting at a 3% fixed return for 21 years. And it was really interesting because now we're moving that out to kind of diversify it. And the other rep had called her numerous times, and he's bothering her to call her to why is she doing this? So I had asked her the question. So listen, has this guy called you? She goes, I've never got a call from him in 21 years. So, again, in your own life, if you have people that you're working with, they're not calling you, they're getting compensated for not calling you. I mean, if they have your money, this is something that they should be doing and working with you to help you. So I was thankful this guy didn't call her because now she's my client and we're going to be, working with her and getting her in the proper allocation as opposed to setting it and forgetting it and never asking her about her goals or what her and she's a couple of years away from retirement now. So she's kind of mad about this, but again, we can't go back. We can only go forward. And that's just something that happened this week. So back to the markets. So, the top 3 sectors that we're looking at this year to date is energy at number 1 and at a 58.1% return. Ridiculous types of numbers. Absolutely ridiculous. Great if you're in, well, let me explain why I say that. Ridiculous because it's a crazy number, but if you're in the stocks, energy stocks, you're golden. If you are filling up your car or have to fill up your home this year or this winter, no, not so good. So, but a very interesting fun fact, energy happened to be the worst performing sector in 2020. So this year, we literally went from the worst to the best. And I was looking at a report today for a client that's been in, this for year over year. And their ExxonMobil stock, and again, I'm not suggesting any particular stocks, but their ExxonMobil stock was up 105%. Crazy. Absolutely crazy. Financials is coming in number 2, the second best sector at 38.6%, and real estate the third at 33.8%. So we definitely see a trend here. Financials are running the wave of real estate in that, people are moving, so they're getting mortgages. Rates are low, so they're refinancing their mortgages if they're staying where they are. So we can see the story there. The bottom 3 sectors, the worst, well, let me go from 3 to 1. The third worst performing sector is materials at 18.9. The third worst at 18. I would take it all day long, right? Utilities at 9.1. And the worst performing sector year to date is consumer staples at 8.8. Again, 8.8, great. But consumer staples, how interesting is that? That consumer staples, for those of you that don't know, is the things that we need, things that we need to eat. We need water, we need shelter, and obviously we need toilet paper. We saw that in 2020 for sure. So I guess my theory is that, well, I guess everybody bought everything that they needed last year and have it stocked in their basement or something like that because it happens to be the worst performing sector. So we're going through some really, really interesting things right now. And we just talked about the stock market, but the bond market it's all in the red with the exception of the municipals. Treasuries, the 10-year treasuries down 4.5 year to date. The U.S. bonds are down 1.6 year to date. Global bonds are down 4.3% year to date. So you can definitely see the dichotomy of it's a stock market and not a bond market. The only bond that's doing well right now is the municipal bond. And I like it. And I know there's a reason why. Municipals are an interesting investment in that, especially if you're in these high tax states like New York or live in the city. It is any interest that you derive from a municipal bond is exempt from federal, state, and local. Now, here on Long Island, we don't care about the local, but the federal and the state will take all day, right? So munis, on the average, are yielding about 1.21. And they're up about 0.5 year to date and 2.5% year over year, or 2.6% year over year. So this has been something when people are coming to me and they're looking for an alternative for their cash that they have. This is something that we're looking towards. And again, not for everybody. It's based on your own situation, so it's not a recommendation. But, municipal bonds can be a nice alternative. And if you can just get a 1% and not have to pay federal and state taxes, that's a big win in my book. So next week, we're going to talk a little bit about people retiring early and a thing called 72T. So that'll be an interesting show. And I can't wait because, it's something that I'm getting a lot more calls on as well. So this weekend, we have daylight savings time. We're going to gain an hour. We fall back, so we're going to gain an hour. I can use that. I'm tired. But don't forget to set your clocks back so you're not late for everything on Sunday. But I want to thank Mike, the engineer. We have a different Mike, the engineer tonight. So thank you, Mike, for making my show perfect. And I thank you all for tuning in. And I look forward to being with you again next Friday. So have a great weekend. And, this is one of the reasons why I hate this winter thing. And I know I always complain about it. But now we're going to be dark in the morning, dark at night. See you next Friday.
Advisory services offered through Blackridge Asset Management, LLC, a registered investment advisor. Securities are offered through Peak Brokerage Services, LLC, member FINRA, SIPC. Blackridge Asset Management and Diversified Financial Solutions are separate and independent entities from Peak Brokerage Services.
The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its sponsors.